All right, guys, welcome back. It is Friday, November 3rd. It's about 10:45 in the morning. Guys, what I have for you is an update on our fourth quarter, where we're at. So since October 1st, we started with a $10,000 account. And as of right now, guys, we're at $19,601.19, something like that. So nearly a double so far this quarter, which means that we're on pace to make it happen. So what has happened in the last week? Where are we at? What are some of the trades that we took in the last 24 to 48 hours? And how are we doing this? So let's dive in. Let's get started as we have had a fantastic quarter this year, even with all the changes in the markets. So let's get started. All right, guys, so let's first get started with our 10-year trade that I put up yesterday. And you can see in here, I put up a 30-minute chart of what I was looking to get short at 4.686 to 4.709. And the 10-year trades in very small increments, but we can add size with that. And that's exactly what we did with 12 contracts here on the 10-year. And guys, very first thing that we have to do is we have to look at trend, okay? So we have lower highs and lower lows, really big sell-offs earlier this week. So when that kind of action happens, I am going to look for either rally-based drops or drop-based drops. And what I have here is kind of a level-on-level drop-based drop. And when we come into that, not only are we into a very good level that pushed down, but and create new lows, but we also, when we came back up into it, we had momentum on our side as our side was less than 60. So we got short here. These black lines are our profit taking targets. And what I mentioned was I put this this trade alert in when price was right on here. Now, what I did not want to see was I did not want to see another low created before we came up here. And the reason why is because we kind of started to form this new drop base area here. Okay? So if we created a new low, I'm not sure that I would have taken this exact same trade, but we never did. It paused and it rallied back up yesterday around 1 p.m. Eastern time. We got short. And by the end of the day, we were at halfway to our break-even target. So if I look at here, right about at 3:40 yesterday, I stayed in Eastern time. I said we're at halfway, so let's move our stop to break even. Now, the stop was right here. So we had a free trade. That's very, very good. We live for free trades here. We want to play with the house money. And we just use that to help eliminate a lot of the risk involved here. This morning, 8:30 news came out. Markets popped. 10 years sold off. And we got filled. I mean, if I look at this, guys, on a 1-minute chart, look at what happened here. Filled and then filled. Like almost immediately, it hit both targets. Within literally 2 minutes, we hit both of those targets. And it resulted in a... let's see, $1,224 on the account. So that's one of the first trades that I want to talk to you about. I have no idea where price is going to go from here, but we did exit out of that position, and it came back, and it's just bouncing up now. All right, it's catching a little bit of a bid from this daily area that it's at, and we'll look for new opportunities, but you can see the 30-minute worked out very, very well down into that daily level. We want to get out before that. We want to take our profits. We want to be risk managers, moving our stops. So that's what happened here. Now, let's bounce over to ZF. That's another one that we took this morning on a daily chart. So I'm going to zoom in here. And when I zoom in, well, before I do that, you guys can see lower highs and lower lows. But we have a little bit of divergence coming in, which is going to lead us to a pop inside of that trend. And that's exactly what we got. We got the pop up. So when that's true, I want to look for very high time frame levels. All right. Now, what's even better is if I can find a weekly level that we're bouncing from. But the reality is that the 5-year Treasury note is at very, very long high time frame lows right now, with rates just the futures rates just selling off in a really big way. So I didn't really have anywhere to base this off of where the pop was going to come, but you can see the divergence even from early August. every time we made a new low, we had less momentum to the downside. So RSI is a measure of the speed and magnitude of price changes on the security that you're looking at. And we can see that the speed and magnitude of the move down was getting stronger and stronger. Albeit still weak, it was still not creating new additional weakness. So I knew that there was going to be a new pop here. And what we did was we saw a drop base, one candle base with a drop, 3 legs out, good expanded range candles out of that move downwards. And when we came back up to it, we were like right at 60, bouncing off that 89, and we got short here. So why are we not in the trade anymore? Well, we're not in the trade anymore because one of our rules here as we're growing this account is we have to take, if we're up more than 10% on the account, we have to take that as profit and finish for the day. Well, the account this morning was at like 17.1, and we made exactly $2,003.13. All right. So as I was updating that, we got filled right about where it's at right now. And what I noted here on that trade was that I know that I'm probably giving up additional profit here, but I have rules and I have to abide by them, and we're on pace to meet our goal. So I started off the day telling our insiders that we're seeing massive moves in stocks and futures this morning, specifically from the indices and the rates. And if I look at the rates and I look at the indices, I believe that we are way overbought based on just what's happened this week over the last 3 weeks. So I would not be surprised to see a pullback here that could lead us to high time frame levels. We're short right now the 5-year on a daily confirmation trade, but it's a very, very tight zone, and we had small time frame divergence. So we're going to be aggressive on our break evens and stops, but a snapback is absolutely possible this Friday. So that's exactly what we got. All right, we took the confirmation trade as it left the level. Okay, so we came into the level. I waited for that divergence to form. There's the divergence on the small time frame. There's the entry, and bam, there she goes. Now we came back up and retested it right before we got our first target here. All right, so the reason I took the first target again was because of our 10% rule. And the same thing is actually happening on the M2K. So we're trading the M2K because of the margin requirements that we have. At this point in time, we were basically at about 18,000, and the Russell right now, the full-size contracts, RTY, is trading, it has cost $6,800 to trade one contract just to put it up. And so that was a little bit too expensive for us based on where we're at on this new starter account. So I took 6 contracts here on the M2K, and that allowed us to play both the 5-year and get short the Russell on this snapback call that I had. And on the Russell, when I look at a daily, we are still very much so in a downtrend, albeit look at this massive move up in the last, what is that, since basically Halloween, okay? So on October 31st, we really started to move out of this level, but we still have lower highs and lower lows, and even though we've had this such strong move, we're only at 57 here on the daily. So if that's true, I want to look for high time frame levels, and this is exactly what I saw right here, okay? Drop, base, drop that leads us to new lows inside of a daily downtrend. Now, I got short here on the Russell, and I put this trade idea up. I said we're in a very solid zone here on the Russell. I'm waiting for another confirmation trade because we are strong on the RSI. All right, we're very, very strong on the RSI actually. And I waited for price to leave the level, and I believe I got filled at 172.29. Okay, so I waited for price to come into that. So the low of this candle right here, as you guys can see up here, is 17229. So that's my it would be my entry zone on a confirmation trade as I waited for price to come in. And as I look at a smaller time frame area, and I mean very small time frame area here on a 1 minute inside the zone, you can see that we had that divergence that triggered me in. Okay, we came way up and about halfway into that zone, and then we fell. But what was happening at the same time as the Russell was falling was that ZF was also falling. We got short 10 contracts here on the ZF. And the reason why I took 10 contracts on the ZF was because of the size of the zone. It was a very, very small zone, about $800 in risk, even only on 10 contracts. And so we came close to not being able to take this trade, but we took it on a confirmation as well because we were above 60, but the ZF is also bouncing off that 89. You guys know how I love that 8 and 89 trade. We're bouncing off of that, and that resulted between the ZF and the Russell, us hitting our 10% rule. So that is a very important rule. I think I should probably abide by that regardless of the size of my account. But in the beginning, when you're just trying to get started, that 10% rule has saved me so much heartache and headache in trying to grow an account. All right. So right now, guys, what you can see here is we started an account with 10,000. We are at 19,609.11. That's a 96% return in basically 33 days. All right. 34 days, I guess. But probably, I don't know. What is that? 24 trading days, right? If you don't include the weekends, because we don't really trade on the weekends. Can't unless it's Sunday night or something, but we're not really doing that. And this month, we're doing pretty well right now. We've got the 3 winning trades, 1 losers, 1 break even, 2 new entries, and the average loss 250, the average win 1,094. And one of the reasons why the average win is only that much is because I had to count the $57 that we made on the Russell trade. And the only reason that we only took $57 is because we hit our 10% rule. You can see that we close out all of our positions for the day because we hit the 10% rule. If I would not have done that, we would have been up much, much more here on the Russell, as it is now, well, what's going on? It's fallen off a bunch, okay? Now, I don't know where price is going to go from here, but what I do know is that right now we're focused on building and growing the account. And so I am going to look for additional levels, but for today, I am done trading. So guys, if you want to join me on this 4th quarter challenge, I encourage you to go to tradelikeNick.com. That is where you can sign up and where you can get alerts to where I give you everything that I am doing to help grow your own account. So if you want to join me, go to tradelikeNick.com so we can grow our accounts together. All right, guys, take it easy.